My name is Alex Frederick. I am a lead analyst at Pitchbook covering agri-food tech. So if you're not familiar with Pitchbook, we're the leading data provider of the private and public markets. We have a massive data set of kind of everything you can imagine around investors, startups, VC and PE transactions. And I funnel all of that data into into insights on emerging trends and VC activity within Pitchbook. So today I'm going to be sharing Q3 investment activity for AgTech. So I put out a variety of quarterly, annual reports. So recently put out reports on fundraising activity, comp sheets and valuation guides for public companies, one-off analyst notes, and the data from this report from this presentation is from a report that we'll be publishing in November, so you're getting a bit of a sneak peek today. So the AgTech ecosystem, as we've scoped it out, is segmented into 5 segments and 17 subsegments. If you look at the data, you might see VC in general is not looking great. AgTech activity is not looking great, but it's not a monolith. I think what kind of this points out is we're definitely seeing areas where there's winners and losers, or areas that are trending and seeing a lot of investment activity, and others that maybe are sitting by the sidelines for the time being. So starting off with a market context, so number of key drivers. It's just a kind of set a baseline, but I'm sure everyone's probably familiar with most of these. But labor crisis, over 2.4 million worker shortage in the U.S., so driving trends in automation and robotics. Climate resilience, so extreme weather, droughts, flooding, are all adding risk and challenging yield. And food security is definitely a growing area of concern for kind of governments around the world, and areas where we're seeing increased focus on how can countries or populations gain food security and food sovereignty. On the challenge side, definitely, we're seeing there's so much innovation kind of in general in AgTech, and some of that has had successful outcomes, but definitely a lot of failures, and so we're seeing skepticism from farmers on what are solutions that will help increase productivity without really harming margins too much, and what will help de-risk. We're also seeing higher interest rates, which is definitely making VC slightly less attractive, so removing some VC capital from the space, and also challenging M&A activity. And policy uncertainty, I think, is a major issue. To what levels can farmers count on government support going forward? So deal activity. So looking quarterly, we could see this pretty steady trend in deal counts sliding down. I think this is no surprise. We saw just in venture overall, this major boom through 2021, and we've seen a steady decline. What's interesting, if you look at the bars over the last 5 quarters, the deal values, we've seen deal values really hit a floor, which is encouraging. It seems like we've hit the bottom. I don't foresee it going down any further. Q3 looks like it's down slightly, but just as we get more deals, I think that'll probably end up being about even. So I think that's good. We've hit the bottom, but deal counts are definitely continuing to decline. They may continue to do so. So that's just pointing to this concentration of capital into fewer and larger deals, this flight to quality. This one, I added this to my presentation last year. I think this is super interesting. This is showing the number of aggregate investors every single year. So from last year to this year, we're seeing about just around 50%, just under 50% of investors people who invested last year have not come back and invested this year. So for startups, I think the takeaway is that there are fewer doors to knock on, but the investors that they're engaging with are mainly specialist investors, and so there's really some higher quality specialist investors who are able to add real value to the investments that they're making. And then looking at valuations, I think it's interesting. Valuations continue to go up, except for, I guess across stages, valuations continue to go up. We're seeing deal sizes continue to creep up, except for early stage. I think this also reinforces the idea there's a flight to quality. There's fewer deals happening. The ones that are happening, there are investors crowding in into the companies that are seen as having the highest rate of success. There's also some selection bias here that I think the data doesn't really capture, but there's a fewer, out of all the deals that are happening, a fewer proportion are reporting the actual valuations. And so you can likely infer that some of the deals that are happening that are flat or down rounds are not going reported. So I think that might be inflating the number a bit, but I would say flight to quality is probably the big takeaway. And then activity by region. So you can see on the top chart, so the deal values by region. We saw until 2023, international markets, Asia, Europe, really have saw a much greater proportion, and that's definitely decreased over the last few years. But I mean, Europe's definitely grown. There's been big pushes for sustainability, a Green Deal by the EU, and then in Europe or in Asia, definitely more government support for AgTech. So all these ecosystems are growing, which is healthy, but definitely seeing a pivot back or reversal back to North American startups. And then looking by segment, the segments that are seeing the most activity this quarter at least are animal ag and precision ag. So I'll dig in a little bit deeper into some of these in a little bit, but precision ag I think goes to the labor shortage is the big driver there. Companies that are bringing in automation, and AI definitely is a shiny object right now. And I think anything AI definitely is getting a deeper look from investors, but it definitely is a catalyst technology that's also really providing some major potential benefits for automation and robotics technologies. And then animal ag, similar. I guess I'll dig into this a little bit in a little bit, but definitely some major near-term potential benefits that these companies are offering. So digging into a couple of the subsegments, I'm kind of going back to the market map. There's segments and subsegments. So segments that are seeing kind of the highest levels of activity: robotics and smart field equipment. Interesting, the top two deals this quarter were both specialty crops, so mushroom harvesting automation robot and an orchard automation robot. So definitely, I'm coming back to AI, and then I think these specialty crops. I've read that labor costs can be 40 to 60% kind of operations for specialty crops, and so being able to leverage automation definitely can improve balance sheets for farmers. And then next one, animal biotech. So you have this bifurcation. You have moonshots, colossal, bit of potentially a stretch to call that an AgTech, but this company is resurrecting extinct species. The angle is that they're improving biodiversity by doing that, but that's kind of a long-term commercialization timeline, so definitely moonshot. And then you have more realistic near-term solutions, so Biomedit that's doing microbial medicines for livestock. And then aquaculture, the third one. This one, I think aquaculture definitely is an interesting space. It's been on the upswing a bit the last few quarters, and this is kind of at the intersection of the increasing protein demand, sustainability, and automation. So there's really some interesting tech here going on, and also harkening back to the idea of increasing food security and food sovereignty for geographies. All right, and so thinking about the flywheel, exits definitely are the most one of the most important spaces to be looking at. And we want want all of these innovations to commercialize and find successful exits in the market. And basically, I think that the takeaway here for me is exits actually look very strong. We're down by roughly half in terms of exit count from the peak in 2021, but we're above. We're about double kind of pre-2021 historical averages. So exits are happening. However, exits are primarily happening in M&A. The IPO window, we saw no VC-backed IPOs this year, pretty much all strategics and buyouts. So I think it's important to think about for investors and startups in terms of kind of planning your exit strategy and what types of exits you can expect and the types of companies you should be engaging with. Interesting to think about the IPO window. It has been essentially closed. We have seen in broader tech more a trickle of companies who are starting to IPO, but it hasn't really seen that in AgTech. So I think some of that is we need to see some success stories of AgTech companies successfully exiting and performing well in the public markets, but also a question of there may be a dearth of companies who have the characteristics making them ready to actually IPO. All right, outlook going forward. I'd say deal counts appear to be continuing to decrease. It looks like we've hit a floor in actual capital, so I think continued capital concentration. Hopefully, as we're seeing interest rates start to decline, we'll see potentially an increase in deal values. Some of the categories that seem like they are seeing increased investor interest, and we'll likely see that continuing into 2026. Automation and robotics, precision ag, and supply chain areas that have exposure to AI are addressing labor shortages and are helping to de-risk and optimize kind of the entire agriculture space. And then thinking about exits, M&A definitely remains kind of the path for the foreseeable future. I think startups should be thinking about engaging definitely with different strategics and corporates, and then thinking about kind of building their companies, thinking about as they plan for exit, how does your company fit with kind of the entire portfolio of the companies of corporates you're approaching. What can you show for grower adoption, and what kind of synergies do you have with a potential acquirer? And with that, I will end there. Definitely feel free to reach out if you'd like to engage further about this content. Thank you.